Yo guys, and welcome to this new YouTube channel and my new playlist Rags to Funded, where I will show you guys how you can go from rags and no money to a past funded account so you can get consistent payouts and make money from wherever you want, whenever you want the money and how much money you want. But I must warn you before, because this journey is very hard and very difficult, and I'm not going to tell you that it's easy or that you are going to make money from the first week or from this first month, because you won't. That's almost impossible. If you put in a lot of time and really lock in and you're disciplined, then I would say it takes about 2 months to master my strategy, and then another month additionally to master your own psychology and your discipline. Because in those months we will lose money. It's almost impossible to make money from the start, and that's why we trade on our demo account first, so we don't waste our own money and we can practice without risking our money. But if after these 2 to 3 months you will learn to trade on your real live trading account and you will risk your own money, then you will take decisions you didn't take before on the demo account, because you have fear to lose all of your money. You have the greed to make more money. And those factors, they change how you think when you enter a trade, or how you think while you're sitting in a trade. And then you take dumb decisions, and it takes time to know which decisions you don't have to take, which decisions you have to think about, and which decisions you didn't take on the demo account, so you know you shouldn't take them on the real live trading account. But still there's a difference between those two. So it takes a lot of discipline and it takes a lot of time, like 3 to 4 months, or if you really lock in 2 to 3 months, if you're taking it very seriously. Then you should also backtest. Like, I always backtested when the markets were closed, like on the weekends. This is very important, because you collect data and you gain practical experience on the markets. And if you put in all of this work, I guarantee that you will become profitable and that you can pass a funded account by yourself. So, by the way, join the free Discord for all the information on the strategy, because on YouTube I can't upload as many videos as on Discord. And I'm thinking about doing live sessions once per week, so let me know in the comments if I should do that. And if you have other ideas, also drop them in the comments. But now let's get started. So today our playlist starts with pretty well known. I drew something right here. We can see, focus on this white pattern, or on this white wave. We can see that we are in an uptrend. And in this uptrend we can see those 5 waves. 1, 2, 3, 4, 5. You can see that wave 1, 3 and 5 are going with the trend upwards. So those are impulsive waves. Wave 2 and 4 are corrective waves, because they are going against the trade. They are going to the downside. So they are correcting because we need those corrections to gain more liquidity to go upwards again with the trend. So we have 3 impulsive waves and 2 corrective waves. And now we can split up those impulsive waves, like wave 1, into 5 waves again. Every impulsive wave is split up into 5 waves. and every corrective wave is split up into 3 waves. So within this wave 1 we have this impulsive wave, which is 5 waves long, and again wave 1, wave 3 and wave 5 are impulsive waves, while wave 2 and wave 4 are corrective waves. And it's similar here for wave 2. Wave A and wave C are impulsive waves because they are going with the overall trend. The overall trend during wave 2 is a downtrend. So wave A and wave C go with the downtrend, so they are impulsive moves. And wave B is a corrective move because it is going up while the whole trend is going down. And wave 3 is again split into 5 waves. We could go into the infinity, but this doesn't make a lot of sense. So I would advise you to use the 15-minute chart or the 30-minute chart at least. I often use the 1 hour and 4 hour and the 15 and 30-minute chart, but not the 5-minute or 1 minute, because this doesn't make a lot of sense. And now for Elliott Wave we have some rules that are very, very important, so pay good attention to them. The first rule is that wave 2 cannot retrace back more than the starting point of wave 1. So wave 2, here this rule would be good. But if it looks like this, then this rule is not given. And we broke the rule. Because this is the starting point of wave 1, and we went below the starting point of wave 1 with wave 2. If this happens, you know something's wrong, and it could be a downtrend. It could look like this. Then this is our wave 1. We thought this is wave 1, and we thought this is wave 2, but if it goes below this point, which it did, this can't be wave 2, so we will say maybe it's something like this. So this gives us a clear definition of how a wave can look and how it can't look, and it gives us a good image of how we can take our trade, because now we would want to take our trade here, about here or here, whatever, and we would put our stop loss right below here, because if it goes below here, we know it might be a downtrend, and then it might go way down, and our take profit, we can take it about here or here, here, here. This is all on the Discord. I'm going to tell you where we put our stop loss exactly and where we put our take profit exactly, so join the free Discord. And this would be a very nice trade. Then we have also for this, if you're wondering what this is, I'll explain it on the Discord. And we now completed wave 3, so we are going down into wave 4. And wave 4 cannot be looking like this, so going down more than the ending point of wave 1. Can't look like this. If it looks like this, then again it could be something like this. Now it looks like this, and then we said it's like that, but if wave 4 goes below this ending point and the whole wave looks like this, then this could be wave 1, this could be wave 2, and now we are in wave 3 and not already in wave 5. So this is very important to understand, and if you didn't understand it, then you can ask questions in the comments or on the Discord, and watch the video again. This part is really important, so if you didn't understand it, then watch it again. And the last rule is that the impulsive wave 3 can't be the shortest wave of the impulsive waves. So if wave 1 is this long and wave 5 is this long, then wave 3 must be longer than wave 1 or wave 5. So wave 5 can be longer than wave 3, which is unusual, but it happens sometimes. Or wave 1 can be shorter than wave 3, but then the other wave should be shorter than wave 3. And if this isn't the case, then we must reconsider our wave numeration. I hope you guys understood all of this, but so you can understand it even better, I'll just show you some nice examples of a wave numeration. So here we have a wave 1. We are in an uptrend. You can see it. We consider just this part right now. This is the wave 1. Then we retrace back to wave 2, but we don't go below this starting point. So the first rule is given. Then we go upwards again into the wave 3. We could have taken a trade right here. I don't know if I have taken a trade, but we could have taken a really nice trade here to the upwards for wave 3. Then again we go down for wave 4, and it does not go below this ending point of wave 1, so the second rule is given as well. And we can see that wave 3 is the longest wave of the waves 1, 3 and 5. So the third rule is also given. And we can see that our Fibonacci extension levels and our Fibonacci retracement levels are hit beautifully. And if you see this for the wave 5, that it stopped right below the zone, that's not a problem at all, because we just wouldn't have taken a trade, and then we would have missed out on one trade, but this is not a problem at all. So we could have taken a trade right here, about here, to the wave 3, and then I don't short this part. I don't short it because wave 3 is so impulsive that it's very risky to short wave 3 or to short wave 4, the correction. But we could have taken a trade here for wave 4 and then to the upwards to the ending of wave 5. This would be beautiful. Two beautiful setups. So and you can also see that after this wave, because this part, the 1, 2, 3, 4, 5, as I said, can be split up. Every wave can be split up into 5 waves. So this whole thing could be combined into wave 1. So we are in this wave. That means that wave 1 is completed right here, and wave 2 starts, and wave 2 is split up into 3 parts. So we have an A, B, C pattern, and this looks very beautiful as well. And we could start again from here, 1, 2, and then we are going to the upwards again, wave 3. Also could have taken a trade. So let me just show you another example. This, we start right here, Then we are going upwards, a long wave 1. Then we are as well correcting beautifully with an A, B, C. Then our wave 3 starts again. We are going up, beautifully hit into the zone, correcting into wave 4, beautifully hit into the zone, and then 5 beautifully hit in this zone as well. So this is really, this would be an A plus wave numeration, because we could have taken a trade about here all the way to the top right here, and then we hit into the zone and directly get an impulsive move. So we could have taken a long right here to the upwards again, and it would be two very nice setups after this wave 1, 2, 3, 4, 5. So we can combine it again into one wave, wave 1. Our wave 2 starts, and we have the wave 2. This is again an A, B, C pattern. As well, very beautiful. And we can see that the A is impulsive, because 1, 2, 3, 4, 5 parts, and B is 1, 2, 3. So everything is perfect in this example. And after this wave 2, we could be in a bigger wave 3, and we have again 5 waves. 1, 2, 3, 4, 5. Again here the wave 3 and wave 4 and wave 5 are beautifully hit those Fibonacci extension and retracement zones. After that, we again get an A, B, C pattern. So this is really an A plus setup on the gold chart. And now we have a current wave numeration on the gold chart. We start right here. We completed wave 1, then we corrected to wave 2. Did not go below this point, so rule 1 is given. We completed wave 3. Could have went long here, but I didn't. I can explain it to you later why I didn't. And wave 4. Now we would wait for a setup, and we would wait for my signals to go off and my strategy, because I don't go in here blindly. Why should I go in here blindly if this could also be wave 1 and then wave 2 retraces back more than this zone? So I wait for specific things to happen before I enter the trade, and those are a bit more complicated. I can also just explain them on the Discord, but the Discord is free, so join up. But we would wait for a long setup of the wave 5, and we can see that this zone was here. So this is the zone, and we can see that we would be in profit right now if we would have entered the trade. So I hope you understood the rules of Elliott Wave and how it would be used to find setups and to numerate the waves, because Elliott Waves also gives us where we put our take profit and where we put our stop loss. With those rules, we know where we put them, and this is the most important thing of Elliott Wave, because we can use it as our base of the strategy, and that's why it's the most important thing of my strategy. You can see that I took a trade here. This was a trade of the wave 5, and TP got hit. This was a pretty good trade, yeah. So if you really want to master Elliott Wave, I would also suggest you read the book Elliott Wave Principle by Frost and Prechter. I'll put a link in the description below. And if you now still have other questions, then feel free to ask me in the comments or on the Discord. I will be happy to answer those questions. the gold chart is, in my opinion, the best chart for Elliott Wave, or the best market. But you can also use it in the crypto market, like Solana and Ethereum, as well as Bitcoin. You could use it on other indices like oil or even the Forex market. But pay attention to the Forex market, because the Forex market is a lot more difficult than gold or crypto, because the Forex market has some own rules, and that's why I don't trade the Forex market at all. Because if you have markets like gold or the crypto market, why should you even consider to trade the Forex market if the strategy works on those other markets even better? But if you master Elliott Wave Theory, and if you join the Discord and use my confluences and really put in the time that is needed for mastering the strategy and mastering your psychology and your mindset, I'm sure that you will have a funded account, a past funded account, in the next 4 months, and you will be able to get payouts on this funded account. So I will give you the advice to log in for 2 months and learn the strategy, and then for 1 month learn how your psychology works, know when you should enter a trade and when you should not enter a trade. Write down your rules and my rules, and then you will have the freedom of the skill of trading, because you can make money from wherever you want. You don't have to be in a bureau, or you don't have to be sitting in front of the computer 10 hours a day. This is not the case. You can go on vacation and still make money to pay your vacation. So I will give you the advice to log in for those next 3 months. I can't give you any other advice, because you are responsible for which decisions you take. If you want to log in or if you don't want to log in, I can't give you more than the advice. So that was the video. I hope you guys understood Elliott Wave Theory and the base of my strategy. Let me know in the comments if this video helped you guys, and if you have any questions, let me know in the comments below. And I hope that I will see you guys in the next video of the playlist Rex to Fund It.